Good evening, everybody. Thank you so much for joining us this evening. I want to share a recent incident with you. One of my clients called me some time back and said, I have received a tax notice from ATO. And his question was, how did they know? I asked him, what do you mean by that? And he told me that the ATO had sent a notice saying he had income in India and which he hadn't disclosed in his Australian tax return. Luckily for him, they did not initiate any penalty or prosecution and only covered last 2 years. I just want to educate all of you on why property sale in India needs to be disclosed in the Australian ITR and its implications. We got a great response to the last seminar, and that's why we have followed up with this one, and we hope that you can make most out of this session. We have had over 100 registrations for this one, highlighting the relevance and complexity of this topic. To give you an overview of the program, in the first 20 minutes, I will be talking about 5 tax mistakes to avoid when selling Indian properties. Then we have 10 minutes for Q&A. We'll extend it if there are a lot of questions. Please add your questions to the chat box and we will address them during Q&A sessions at the end. At the outset, we have a disclaimer. This presentation should not be considered as tax advice. Please consult your tax agents, lawyers before proceeding further. We are sharing this information for everyone's benefit. Before I begin, I would like to give you a bit of context by telling you about how Nobilis NRI taxation was formed back in 2016. It started with my experience of trying to bring funds into Australia. Despite being a chartered accountant and a CPA of Australia with an international taxation background, I struggled to navigate through the maze of different tax rules in Australia and in India to bring funds. It was a stressful process, too complex, no set process, and no standard format. Indian CAs don't understand Australian tax rules, and Aussie accountants don't get the Indian tax rules. I realized, I had the skills and expertise to help others in a similar position. So 8 years of dedicated efforts from my amazing team in Bangalore and Sydney, we are here today. Angla is a director and head of operations in India. Pranati is a chartered accountant with many years of experience in PwC, having great insight into an international taxation. Neeraj is an Australian ITR expert who worked in Melbourne for a few years. Okay, to start off, over the following few slides, I'll be describing in detail the 5 tax mistakes to avoid while sending Indian properties and repatriating the funds to Australia. As you may see, the ultimate objective is to bring funds from India to Australian bank account after selling the Indian property. How do we do it? We have few hurdles to cross before reaching that happy moment of having funds in our Australian bank account. Should you disclose an Indian property sale in the Australian tax returns? Let us see who has to disclose. Why do you need to disclose? And what aspects needs to be disclosed? I understand and empathize that many individuals may not have included certain details due to the lack of clarity and the confusion surrounding them. In some areas, it is not entirely clear, but when it comes to disclosing this information and capital gains in the Australian tax return, it is essential to adhere to the Australian tax law. It can be challenging to accept the fact that you have already paid taxes in India on these capital gains and haven't brought the funds to Australia. However, Australian tax law is very clear on this matter. It must be disclosed in your Australian ITR. At our firm, we have been assisting our clients in properly disclosing this information and utilizing various tax planning strategies to manage and meet the required tax obligations. It provides a peace of mind knowing that you're doing the right thing and avoiding penalty, especially if the Australian Tax Office or Austrax eventually conducts a data matching. Just to recap here, the permanent residents and Australian citizens need to disclose your property sale in India in your Australian tax return, which includes a global income and including capital gains. It's also wrong to assume that if we don't bring the funds to Australia, then we don't have to disclose it in the Australian tax return. The second mistakes which our clients sometimes do is a financial year in India and Australia. The financial year in Australia starts from 1st of July to 30th of June. But in India, financial year starts from 1st of April to 31st of March. It is advisable not to sell a property in the month of April, May, June because of the overlapping of the financial year. For example, if you sell a property in April and you will have to wait till next April to lodge your tax returns in India. However, you need to lodge your tax returns by August in Australia. So it is better to sell during the December, January based on our experience. Not doing Australian tax planning before the sale. Planning the Australian tax return beforehand will help you minimize the overall tax liability both in India and Australia put together. As you are aware, such transactions can have a significant tax implications both in India and Australia. I believe it is crucial for us to engage in a proactive tax planning before these sales occur to ensure you can maximize your savings. It's very helpful in the case of an investment property or inherited properties. Tax planning is a very powerful tool that can substantially reduce your tax liability in both the countries. As we have discussed earlier, as an Australian, you have to pay taxes in Australia for the Indian sale of shares or properties, irrespective of the funds reaching Australia. By strategizing ahead of financial year end, we can explore various lawful avenues to minimize the taxes you owe. This might include timing the sales, taking advantage of dual tax exemptions and deductions, and other strategies tailored to your unique situation. It's important to note that our options to optimize your tax position significantly diminish once the financial year concludes. After the year end, our ability to influence the outcome of your tax liability is limited. And we will primarily focusing on the compliances with the ATO rather than tax saving strategies. Just to give an example, reinvesting your funds, let us say 50 lakhs rupees in bonds in India does not attract a capital gain tax in India. And this option may be suggested by you by a chartered accountant in India who may not be fully aware of the Australian tax rules. This tax exemption is not recognized in Australia. You will have to declare it in Australian ITR. We can assist you with our customized tax minimization strategies, by which 60 to 80% of our clients end up not paying any taxes in Australia for the property sale. Property sale in India need to be disclosed correctly. In our tax advice report, we consider our tax liability, the cash flow requirement to suggest 4 different options for you to choose from to minimizing the overall tax. And we also consider visa conditions and rules, date of permanent residency and citizenship, and date of purchase to apply a tax minimization strategies. The fourth mistakes which often made is a lower withholding of taxes. There is a TDS of 20% on sale price. Lower withholding of tax improves your chance of getting funds faster. If you have already given a deposit or require funds immediately, this is helpful. This usually takes around 6 to 8 weeks to do this, and it's a good idea to get in touch with us well in advance of your planned sale. And there is a lot of options available to reduce the 20%. And even we apply a lower withholding of taxes, and sometimes we do get zero if you have made a capital gain loss in India. NRO account, PAN, KYC to transfer funds to Australia. These are basic documentations needed. Funds get stuck in India because of something simple like not having an NRO account. PAN need to update it with your current status. KYC, please make sure KYC is updated with your bankers. And the previous ITR, which I always recommend, that if you have any property in India more than $50,000, you need to disclose those informations in the previous ITRs. If you have any income in India during the previous years, make sure that those informations and income is declared properly. If you haven't declared, please amend your tax returns for the previous years and make yourself ready for the property sale. You can reach out to us if you want to, revise or amend your tax returns so that you are properly prepared for sale of property in India. What do you need to repatriate the funds? In most cases, funds are deposited into an NRO account. And how to avoid 20% withholding taxes? Answer is very simple. It needs a tax planning. The other common question which I get to answer is that how much can you transfer? Without RBI permissions, we can transfer up to 1 million US dollars. That means approximately 1.3 million Australian dollars per financial year. So you have really good scope for you to get the documentations right without going through any hassles as such. If let us conclude with the CA certificate, which is called 15CA 15CB. To transfer funds from Indian NRO account to Australian bank account or to the NRE account, you need to have a certificate from the chartered accountants. And often sale proceeds are transferred to the NRO account. You approach a chartered accountant for the certification, and CA will certify based on verification of all the documents and taxes has been duly paid. Fill the form A2 given by the banker, upload the forms in the 15CA, 15CB, and we have a checklist. What are the information which you need to do, what you need to do, what steps which you need to take to transfer the funds effectively. Once you fill the form 15CA online, we also need login credentials for the same, and provide all the three forms to the bankers. And if you have a relationship manager with the banks, it's much easier to transfer the funds. Banker will transfer the funds to NRE account or your Australian account directly. So it is freely repatriated if you have funds in the NRE account. At last, the happy moment is here. Your funds have landed in your Australian bank account. At the end of the presentation, we offer advisory services to maximize your tax benefits and assist clients in the challenging situations in India or abroad. Additionally, we have a network of professionals who can help you with Indian property purchases or assist in selling and repatriating the funds to your Australian bank account. You'll get a high quality advice from us on time, every time. We also have a network within our client base who are looking to buy Indian properties. If you are looking for a buyer for your Indian properties, you can certainly assist you with that. Alternatively, if you have already found a buyer, we can help you with sale and repatriation process. Best to reach out to us at least 8 weeks before the planned sale. All our partners have a good understanding of the requirement of an Australian permanent resident and citizen selling a properties in India, and you will be in safe hands. Our vision is to offer one-stop solution to sell your Indian properties, bring that funds here, build your real estate investment portfolio in Australia. We offer a peace of mind with a lot of hand-holding from our Indian team and value for service. This will reduce uncertainties in this process, and your funds are going to come to Australian bank account. Just write to us at info@nritaxation.com.au or WhatsApp us. Get in touch with our team, and we will be happy to answer your questions. Please write those questions in the chat box. Thank you very much. Thanks for attending the webinar.